Are you a confident stock market investor, guys? And I'm also going to break down for you my entire six-figure dividend portfolio sitting at $112,538 as of this very moment, guys. And on top of that, I'm getting a $5,343 drip, which actually equates to an 8.7% yield on cost. I'm going to explain all of this, so let's just jump right into this. Welcome back, my passive income investors. Instead of just kind of breaking down my insane portfolio that's getting more and more complicated by the bloody day, I'm going to throw them up as screenshots so you guys can see the best performers. Well, I explained to you how I'm actually achieving an 8.7% yield on cost. It's something that I've noticed a lot of dividend investors talk about, and I always just show you the exact percentage on the total portfolio, but I'm not showing you how much money I've actually put in versus the gains that I've had. And I was watching some PPC Ian, which I always recommend you guys check out. He's an awesome dividend investor, and I always noticed that today he mentioned something very interesting, which was that his confidence comes from time in the market, and because he's had capital gains over that time, you're more confident against a market drop. I realize I over-exaggerate my confidence and my exuberance on this YouTube channel for you guys, and you guys don't fully realize that, you know, I've had an insane rate of return, and that confidence comes from the fact that I know if my portfolio dropped 30%, I wouldn't even be losing money that I worked for. And that's a confidence that can only come over time, because obviously in the beginning, if you're just getting into investing, you're going to feel the ups and downs, and they're going to be real painful, more for you than me probably. And I've just come to realize that if I take my entire amount, the way I've come up with this yield on cost was really quite simple. All I did was, on your tax-free savings account, the max limit is $63,500. So all I had to do was minus that from the amount that I had in there, and then all I had to do was add in all the money from my other account. And I don't know what capital gains or losses I've fully had on that account, but I know that account has had crazy returns, so I can't even fully equate for how much of that money is worked for money and not worked for money, considering some of it was contributed into my tax-free savings account. All I know for sure is basically if I just add those two numbers together, minus out all the extra money I've made in my tax-free savings account, I end up with a yield on cost for my dividend of 8.7%. I want you to try and grasp that for a moment. The money I have invested over the last 6 years is currently every year making me an 8.7% return, and I hold Apple, Microsoft, Johnson & Johnson, Starbucks, all those wonderful companies, guys. That's where most confidence comes from in the stock market, and it's something that I think people might have a hard time understanding until they've been in the market long enough. You find that your risk tolerance gets a little bit more comfortable. You might be able to take on a little more risk, and I figured this was something important to talk about, because in the last video I made, I broke down how a lot of the corruptions and my own personal thesis on the marijuana markets, because that is where I made most of my money. I made a lot of money in the beginning of my trading years off the marijuana industry. Guys, you can go check that video out. It was the last video I posted. But I realize on here, you guys only see the end result. Which is why I try and push people into investing as soon as possible, because it's about time in the market, which the great Warren Buffett always says. It's not about timing the market, it's about time in the market. I do believe is a quote straight from Warren Buffett and Charlie Munger, the billionaire investors, guys. This is something that you should learn to understand early on in investing. And I know a lot of you guys are new to probably investing, and when you look at my portfolio and listen to me talk, a lot of it's probably pretty overwhelming, but I'm actually impressed that a lot of you understand most of this fairly in depth. In fact, I'm glad that I'm playing with multiple accounts now. I'm still learning the other account before I break down the two platforms I use, because I'm mainly using Scotia iTrade and Royal Bank because I am here in Canada. So if you are a US investor, you can literally take the entire 112,000 and put it in, well, actually a lot of it's in US dollars now. I'd have to do the exact amount to show you the conversion rating, but I think it's 112,000 Canadian converted to US would probably be closer to what, 80, 90,000 US. Hopefully that helps gauge the currency difference as well. I noticed that in my new Royal Bank trading account that it actually shows me the currency difference, which in my Scotiabank I can't really see it. It just automatically adjusts, and then all I get to see is how much I'm losing, including on the loss of the currency, and it also gets reflected in the book value of my entire portfolio. Whereas in Royal Bank, it actually shows me if I'm down on the stock and if I'm losing money on that, and if I'm up on the actual the currency value of it being in US dollars, which I'm showing you right now. You can check that out as well, which is really, really neat in my opinion. But other than that, guys, I am still like rolling around on the floor watching this market. If you guys were in the markets today and you were buying yesterday, like every investor I know was, like, you guys got to listen to these people in this community, guys. We're like, it's nice that we can, I don't want to be cocky, I hate constantly pushing my own opinions on, but we follow this mantra, guys. It seems to just work. If you bought stocks yesterday, there's a good chance you could have just did a day trade and made some money on just about any stock you could have bought. There was so much red the day before it. And like I said, the markets are getting into this very volatile state where I don't think we're going to see much more upside. We're going to see this sideways trend line. And when there's sideways trend lines, there's only two fun things to do, and that's swing trade or consistently buy the dips, which is all I've been doing most of this year. In fact, I overbought in stocks. I didn't think I'd be able to max out my positions in the sin stocks as fast as I did. They've been my main focus this year. So I've really been driving money into like MO, BTI, and it's divided between two accounts. And I really love those companies a lot, but I've gotten to the point where they make up, I think, about 28,000 Canadian dollars of my entire portfolio, which means I've got them to a position where I'm happy, and now I'm looking into other stocks. Many of you guys know, obviously, those other stocks are going to be more staple companies. Now that I've gotten nice exposure to high income companies, I might look at one more REIT. I still want to add a REIT to my portfolio. And I know I was talking about the entire collapse of Canada's housing market here, but the fact of the matter is it's really only going to affect the person that can't afford the house. A company like RioCan is a billion-dollar, multi-billion-dollar conglomerate, and they own some of the best real estate in Toronto. It doesn't really matter because they're just incredibly intelligent places to get income because they're diligent, they have the capital already, and if their equity goes down, it's just a write-off. When you're playing on that level, it's a bit of a different ballgame, especially when you already own the real estate and you're just in construction zones right now, and you can see the projects they're doing. That is the only way I can see getting into real estate in Canada without taking on a massive amount of risk. I mean, play with the big boys. I might be adding some of that to my new portfolio, but I'm mainly looking at still more of them drug companies. I love saying this quote, but Mama always say it. There's always money for cigarettes and alcohol, and it seems to hold true even in recessions. So I really want to focus on these recessionary proof stocks. I want to focus on like Johnson & Johnson. Triple M was a suggestion you guys made, and I'm going to buy a bit more shares on that. Like I said, I'd like to build those up to maybe $4,000 or $5,000 positions, but this is going to start slowing down because in my portfolio, as it stands at this point, I really need to start paying attention to the taxes. We are 6 months into the year, guys, and I have funneled most of my money into expenses, which is going to bring my tax bill down a lot, but I've also put a lot of it into this stocks and a little bit into my RRSPs. So the next thing I got to start paying attention to into the rest of this year is making sure I'm very careful with how much tax money I have aside and how I'm going to mitigate myself from paying as least amount as possible. And it comes down to putting it into the RR, Registered Retirement Savings Plan. I think in the States it's called a 401k. And essentially, I'm putting it in there because first-time home buyers can pull money out of that for buying a home. And I'm a first-time home buyer, and I want to get into real estate at some point, whether that's 5 or 10 years from now. I'm going to pull that money out of my RRSP. I don't know, not in Canada. We're a little ways from that, but I want to always be ready to buy a house in case the opportunity arises. I don't want to be someone that just sits here and talks about it. I want to actually be in the position where I'm like, look, I know I can do this now. Let's just be patient. I'm not in a rush. It could be 3 to 5 years from now, but when an opportunity comes up and it makes sense to me, who knows, maybe I'll jump on it. Other than that, guys, there is a ton of other stuff going on in my life. I'm still looking into some online businesses. I'm still looking into Airbnbs. I'm constantly educating myself on all of that beautiful, wonderful stuff, which in the next few months I will be starting to take advantage of. And I will show you guys some of the projects that I'm working on. As of right now, if you do not know me, guys, I am a full-time magician. There's a playlist that I put on here that I haven't updated that much because I've been working on selling tickets to a show that I'm doing September 26th, which you guys can see is going pretty well. I've got a few more tickets sold here. A lot of tickets are gone here because I'm using them as basically giveaways. I'm promoting and selling tickets in person. I find works really, really well. And I'm hoping this show is just going to be something fun. I'm introducing a lot of my bosses. I'm going to try and do the Grant Cardone thing, which is surround yourself by the people that you essentially need to work with and you want to meet. So I've never done a public show in a long time. I rented an entire 500-seat theater. And I'm going to update you guys on this and as much as humanly possible because the second day, so I'm doing this big show and then literally the next day I'm flying out to San Diego for the Stock Twits conference where I will be doing a 15-minute performance and talk about financial independence, retire early journey, guys. And I'm really hoping to bring you along with it. Maybe we'll even try and set YouTube up to live stream it if they have decent Wi-Fi there. If not, I will definitely film as much as I can to share with you guys because I can't believe you guys stick around watch these videos. I really want to grow this YouTube channel. So if you guys are new to this community, consider slapping a like if you enjoy this knowledge. If you enjoy me showing you my portfolio, which I've worked my ass off for. Like I said, you guys only see the end result, but really the amount of money I have had to work for to contribute to this is something literally, I don't imagine it's $85,700, but it's definitely around $70,000, $80,000 is what I would have had contributed. And just ask yourself, how much work do you have to do for that? Because trust me, I've worked my bloody ass off to learn this stuff, put that money in there and get it to where it is today. I'm 6 years deep, and I hope you guys will stick around for my full financial independence, retire early journey here on YouTube. And I really want to turn this YouTube channel into something amazing. So stay cool, stay awesome. I'm in this for the long game, guys. I look forward to chatting to you real soon.